I focus entirely on liquidity. All I care about is fiat liquidity. The pace of credit creation disappointed expectations, and that's why we had this pullback from 110,000 to we got to a low of like 76,000. I think, obviously the United States is the most important barometer of credit creation globally. Everyone else sort of reacts to what's happening in the US. Yep. And I think there's a seminal change in the tone of Powell.
Arthur Hayes is back, and this time he's sounding the alarm in a good way. In this interview, he breaks down why Bitcoin is no longer just about halving cycles or tech upgrades. It's the ultimate signal for global fiat liquidity. Forget the 4-year cycle. This is about central bank balance sheets, credit creation, and Powell's sudden shift from QT to quiet QE. Hayes explains why the Fed's subtle pivot is massively bullish for Bitcoin, what Powell's real message was under all the noise, and why he believes $76,000 might have marked the bottom. If you're confused by where we are in the market cycle, or wondering what comes next for crypto, this conversation cuts through the noise. Let's get into it. Down.
Where do you think that we are in this current market cycle? I know that maybe you're not the biggest subscriber to the 4-year cycle, or maybe you are, I'm not sure, but I know it's mostly liquidity driven. But maybe you could explain, because I think that most people who have kind of been studying 4-year cycles are a bit thrown off by where we are right now and a bit confused.
So I think that the 4-year Bitcoin halving cycle and sort of the minor profitability and how that swings over time made a lot more sense in terms of a market cycle when Bitcoin was a much smaller asset class, and I guess in crypto in general, because if Bitcoin goes, everything else follows. But now that Bitcoin and crypto are a bona fide asset class, they're talked about in every major financial network in the world. Every central bank has an opinion on it, whether it's good or whether it's bad. You have the leader of the empire of the US talking about Bitcoin and policies, and everybody's responding with that sort of stuff. So now I think Bitcoin has transitioned from this sort of technological digital bear asset into the best smoke alarm for fiat liquidity that we have globally. Previously, that role was held by gold. Yeah, gold and Bitcoin have some different properties that make them react a little bit differently to things. And now I think we have a 24/7 market. Anyone with an internet connection can access it. And it's really just driven on fiat liquidity. So as I've broken it down in my essays before, I break down Bitcoin's price value as, on one hand, it's technology. On the other hand, it's fiat liquidity. And so in the beginning of Bitcoin, there's a lot more technological change as sort of the ecosystem was building, and sort of technological developments were much more rapid. These days, the amount of change that happens at Bitcoin core is quite small, and obviously it takes a long time for the community to coalesce around how they want to change things. So the technology piece is pretty standard. There's a number of wallets that are getting added to the network at some rate over time. It's not anything magical or crazy. And so you can kind of forget about the technology piece. It works. And so whatever. It's really about fiat liquidity. How many dollars, euros, yen, yuan are being created and destroyed? And that's going to make its way into what we think the price of Bitcoin should be right now and into the near future. And so that's why I focus entirely on liquidity. All I care about is fiat liquidity. And yes, the stock market and Bitcoin can move, in tandem or not in tandem because of these conditions, but stocks have other things that decide the value, specific companies, earnings multiples, all these other things, right? Bitcoin, we have none of that. As long as we believe it works, then it just comes down to how many fiat things are in the denominator, and then you just get to the price. And so that's why I spend all my time looking at liquidity, and that's all I care about. And so if it's a 4-year cycle, it's a 4-year cycle. But if it's not, it's not.
Yeah, I think that we'll probably die one day. Not sure when. When you say global liquidity, are you referring mostly, are we tracking that through M2, the global M2 supply?
I think M2 is such a convoluted measure because it's defined differently in every single different country, and reported differently. And so I try to keep things as simple as possible and track the least amount of variables. And so right now, all I'm looking at is the United States, China, Japan, and Europe, and so EU. And that's all I care about. And obviously there's a lot of other central banks and countries out there in the world, but those are the 4 major ones. And I track bank credit. So how much credit is being emitted by the banking system? That's somewhat difficult in a lot of jurisdictions because of how infrequent the data is published. And I also track central bank balance sheets. And usually most central banks report that on like a weekly basis. And what are they saying about what their plans are for the future and how they're going to change whether the price of money, the interest rate, or the quantity of money, quantitative easing, money printing, all those sorts of things. And so that's kind of what I look at.
And so how are those measures coming in right now from different central banks that you're tracking, the liquidity within those? Where are we right now? Have they been going up? What is it telling you?
So I think post the Trump victory, Bitcoin obviously had a stellar rise from 70 to 110,000. People expected all these great things. And I think a lot of this, we're going to have all this money printing and all these sorts of things are going to happen. And I think the pace of credit creation disappointed expectations. And that's why we had this pullback from 110,000 to we got to a low of like 76,000 last 2 weeks, whenever it was.
Yep.
And I just put out a tweet earlier today. I've been doing some analysis over the weekend and listening to various folks. I think obviously the United States is the most important barometer of credit creation globally. Everyone else sort of reacts to what's happening in the U.S. Yep. And I think there's a seminal change in the tone of Powell at the last Fed board meeting, where prior to this he was pretty antagonistic towards Trump. I'm staying. I'm independent. Inflation, we're going to fight it. Don't fucking talk to me about interest rates. I'm going to do my own thing, right? Yeah. I'm here to solve inflation. Shut the fuck up, Trump. Like, I don't care about your policy goals. Then in this press conference is a complete change of tone. Number one, they are going to decrease the pace of quantitative tightening, meaning they're going to let less treasury securities roll off their balance sheet, which is a bit curious because number one, inflation is still above their target. So core PCE is the inflation targeting. I think it's a bullshit metric, but whatever. It's the one that they look at. It's above 2%. Stocks are at all-time highs. Maybe they're 4 or 5% off the all-time high, but still all-time highs. Unemployment, all-time lows. Real GDP growth, stellar in the United States. And the balance sheet is up over $3 trillion from COVID. And the whole point was, let's remove this credit from the system to stifle inflation to help the average American. And yet at this press conference, when the American economy is on, in all sort of ways you can look at it, doing very well, saying, I need to reduce the pace of removing the thing from the system that's caused all this harm to the average American. That's a bit strange. And then he went on to say, we think that possibly we could allow our mortgage-backed security runoff, which is about $35 billion a month, to be negated by buying $35 billion a month of treasuries in the near future, right? So that's, MBS, QT, U.S. Treasury quantitative easing, because now you're effectively buying treasuries with printed money. That's very positive for dollar liquidity. And then you have in the background.
I missed that part. So I knew that there was the reduction in the treasuries from 25 billion to 5 billion, and then I thought they were leaving the mortgage-backed securities unchanged, which is still 35 billion. And then you said that they're going to offset that. I missed that part.
So Powell said that in the future, we haven't decided when yet. He was teasing this, telling the market what they plan to do, almost like a trial balloon to see what the reaction would be. Hey guys, we might taper QT to be flat, so the Fed's balance sheet will be stagnant, but we'll, on one hand, we'll be allowing $35 billion of mortgage-backed securities to roll off our balance sheet. But instead of that $35 billion is reducing the size of our balance sheet, we're going to take that money and we're going to go in the treasury market and buy treasuries and keep the yields low to help Trump, which is very stimulative for financial conditions globally.
Okay. Totally missed that.
He didn't say this is definitely going to happen, but when the Fed teases something, usually it's going to happen in the near future. They teased QT being reduced, I think, in the December meeting. When you looked at the minutes, there was like, hey, there was votes or governors saying, hey, we think that the pace of QT should be tapered sometime in this year. And you had the big banks arguing for it in the latest quarterly refunding announcement, saying, we believe that QT should be ended, quantitative easing should begin. And now you have Powell saying, hey, we want to help the treasury market, but we're still not going to be, we still can't call it QE because that's bad publicity. It's still balance sheet constant, but it's kind of a QT twist. On one hand, we'll allow MBS to go down, but on the other hand, we'll buy some treasuries. So he said that. And then finally on this tariff piece, because everyone is just freaking out about tariffs. What's Trump going to do on tariffs? Is it going to be reciprocal tariffs or a 20% tariff on everyone? He said, we believe that the inflationary aspects of tariffs are transitory, which basically means, let's say that Trump goes full retard, 50% tariffs or some ridiculous number, and that causes domestic inflation in the US as prices rise. Powell says, no, that's not inflation. We can still continue to ease conditions because we believe that is a transitory effect. That is not a long-lasting measured inflation, and therefore we are within our mandate to continue to ease monetary conditions. So tariffs don't matter anymore to Powell, and they shouldn't matter anymore as crypto investors. If Trump does 50% or he does 2%, it doesn't fucking matter because we know that Powell's going to continue to provide the monetary conditions, the easy monetary conditions that we need to have our portfolios go up in value in fiat dollar terms. So those three things, you know, as I sort of thought about it and listened to some other commentators, made me extremely bullish on the new trajectory of crypto. And I think that on balance, we probably hit a bottom of 76,000. Does that mean that we're not going to retest it? No, of course not. But if I had to make a bet, I would bet that we go higher rather than lower.